So let's get started. So just an overview of the presentation. Why do you use technical analysis? How is it different from fundamental investing? A very, very quick primer of the theory of it, and then just some vocabulary words, and then on the right that lists what we'll be doing in the product itself. So why use technical analysis at all? Essentially, when it's used properly, it can help you predict future price movements. So it does this by looking at chart patterns, trends, and trend reversals, divergence, which I'll go over, overbought and oversold conditions of a stock, and support and resistance levels. So essentially, you're just trying to find the best time to enter a position. And it's also very easy to do in Stock Rover. You can just practice it without actually having to worry about using your actual portfolio. You can create a fantasy portfolio or just keep a watch list of stocks that you're keeping track of their technicals for. So just some background on how it's different than fundamental analysis. Fundamental investors try to measure a company's value, whereas technical investors just believe in the price. They believe that the stock's price contains everything, so there's no need to look at the other fundamental metrics. Fundamental investors look at financial statements, whereas technical investors look at the charts, mainly the price and volume charts and their derivatives. And the fundamental investor tends to look at a longer time period, over months or years, whereas technical investors operate in shorter time periods, weeks and days. And that's partially due just to the amount of data, whereas the fundamental investor uses the reports mainly. Those come out quarterly and yearly, so there's not a whole lot of data per year. The technical investor uses not only day-end prices but also intraday data, so there's a lot more data to work with on that shorter time span. And finally, fundamental investors buy assets that they believe will increase in value, whereas technical investors don't really care about value. They just want to buy something in order to sell it at a greater price. So they're pretty different, but despite that, you actually can use both at the same time harmoniously. So one way that you could do it is if you have a security that you think is undervalued, you could use technicals to find the best time to enter in that security. Or you can see how the stock price reacts to fundamental news. That would be another technical type of technical analysis. So even if you don't identify as a technical trader, you can use technical methods just as a research tool. And actually, we have snuck technical analysis into almost all our webinars. Anytime we're checking the trend of the market, a sector or industry or stock, that's technical analysis. It looks at trends. So this is just a very brief one-slide thing on the theory of technical analysis. I don't want to go too deep in, but I think it's useful to kind of understand where it's coming from. First of all, the market discounts everything, or that's what technical analysis believes, or analysts believe. So essentially the market is perfectly efficient, everybody knows everything, and the price perfectly reflects that. So there's no use in trying to find an undervalued security because the price reflects the fair value of the stock. So that's one of the tenets. Another one is that the price moves in trends, and so they can be long-term or short-term or kind of sideways. It varies, but essentially if the price is moving in a certain direction, it'll tend to move in that direction unless there's some sort of signal of a trend reversal. And lastly, the third tenet is history tends to repeat itself. And this is kind of the whole basis of why we even look at these chart patterns. The idea is that investors react in the same way to the same sort of chart stimuli and react in the same way. And so the chart follows a specific pattern, and that's how you can see them over and over and over again. So that's it for the theory. I promise no more, and we'll get started with soon. I just want to go over some vocabulary first. So a chart pattern is something I'll be talking about. It's just a formation in the stock chart, and it creates a trading signal. So this is a double top. It kind of hits a price twice and then bounces past it. So that's a fairly common one. There are hundreds and hundreds of chart patterns. I'm not really going to go over them today, but just know that you can Google them, and all you really need is a daily price chart that we have in Stock Rover, and you can try to find some chart patterns yourself. I'm going to talk a lot about trends. So trend, not surprising, it's just the general direction in which a security is headed. And they can vary in length, and you can have kind of trends within trends. So this is a long-term upward trend, but then there's some downward trends in the middle. We'll also be using some indicators and oscillators. So these are just calculations that are based on price and volume that also measure trends, volatility, and momentum and they're used with price charts, and they're just meant to basically predict a future price movement, and they're used on a pretty short-term basis. So the ones we'll be going over are the relative strength index, the money flow index, and the moving average convergence divergence. Divergence happens when an indicator doesn't agree with with the price chart. So you should be using the indicators in conjunction with the price chart, and divergence can signal a trend reversal. So again, it just is trying to predict what's going to happen. So here in the screenshot, you can see that the price is going up, but the indicator below, which I'll talk about in the demo, is going down. So this signals divergence. You can see they're going in opposite directions. And lastly, support and resistance levels. These are just prices at which a stock has trouble going above and below. And they're basically from crowd mentality around a stock price that investors think is important, and because of that, it's almost self-fulfilling. So say for the stock, if it's never gone above around 55, as it approaches that price, investors that have the stock might get worried that it won't go above it, and so they start selling, and then it kind of becomes a self-fulfilling prophecy. As people sell, it doesn't get past 55, and it goes down. And there tends to be a lot of volatility around these price levels. So these are some of the things that we'll be going over today in Stock Rover. And with that, I'll switch over to the, just bear with me as I switch over to the product here. All right, I think you can all see that. So today, we're going to largely focus on the chart. So what I'm going to do is minimize the Insight panel by clicking this double arrow icon on the top there. So that makes it wider, and I'm also just going to drag it taller, so that way we can get a nice look at the chart and have it take up most of the Stock Rover screen. Premium users could also pop out the chart in a separate window if they want by clicking the diagonal arrow there. So some of the technicals that I'm going to go over, which will be right here in the technicals menu, some of them are straightforward and kind of easy to understand, and some are a bit more complicated. But overall, regardless of the technical analysis itself takes a bit of finesse and practice. It's really more of an art than a science. So the interpretation of technical analysis can also vary stock by stock. So some stocks may be highly cyclic and some aren't. So you can also apply a different, or you can interpret the technical analysis differently for each stock depending. And lastly, there's just way more to technical analysis than I'm going to go over today. But this is meant to just introduce the concepts, and you can Google it and find just absolutely enormous amount online. But I encourage you to read up more about it and try it out in Stock Rover because it's really easy. And lastly, as always, nothing said in this webinar is a recommendation to buy or sell a stock. Always do your own research before committing capital. All right, so with that, I'll just dive in. So the first thing I talked about was just chart patterns, and I'm not going to show any of those today, but just know that all you need to find a chart pattern is just the stock price here. And so you can look at different time periods and see if you can spot some. If you Google chart patterns, you'll find there's a bunch of really well-known ones, some obscure ones, but that's a whole huge area of technical analysis that I won't go over. I'm going to start with the moving averages. So if you go to technicals, you'll see that this is a list of technicals, and the first one is the simple moving average, which I'm going to just mouse over, and you can see a little description there. And essentially, the simple moving average and the exponential moving average are meant to find trends, trend reversals, and support and resistance levels. So the default periods that we have are 50 and 150 days, but you can change these if you'd like or add a third one. When you select that, it'll chart on top of the main chart. And I just wanted to point out that I have two tickers in the chart right now, Google and Facebook, but when I added the simple moving average, it only charted on top of one of them. And that's because the technicals will only apply to the primary ticker, and that means that's the left ticker in the research box up here. And that's because if you had several tickers, it could get pretty messy pretty fast charting two lines on top of every line. So it's really best to do technical analysis with just one stock at a time. If you want to change the primary ticker, you can just left-click and select Move Left. So I've just left-clicked Facebook, and it's moved into the primary ticker position. And now you can see that the simple moving averages have updated to dependence, and then they switched here. And now with that, I'm just going to get rid of Google so we can look just at one. So the simple moving average, which is what we're looking at, smooths out fluctuations over time, and as such, it makes it easy to see if the stock is going up, down, or sideways. So you can generally eyeball this, but sometimes it's helpful if a stock has a lot of volatility. And it's also helpful to see the two different term averages in relation to each other. So here you can see that the 50-day average is above the 150-day average for almost the entire one-year period that we're looking at, although it has narrowed recently, which means that the stock could be heading for a downturn. So but in general, we're an upward trend. When there are crossovers between two different averages, or moving averages, that could signal a trend reversal. So here you can see the only one in this chart that we're looking at is on August 8th. This is a bullish crossover, and it's when the 50-day moved above the 150-day, and that's kind of a signal to buy. It means that the momentum has changed on the stock, and now it's heading upwards. If you take it back 2 years, you can see how it looked, and it looks like it was kind of skidding along, not looking so great, and it had a big uptick shortly after there was that crossover, and then it's been fairly solid with some pretty big volatility in between. But in general, that's how you read crossovers. A bullish crossover is when the short term goes above the long term, and that's a signal to buy, and then the reverse of the short term average goes below the long term average. That means that it's a signal to sell. But again, you always want to use it in conjunction with other analysis. They can also, the averages can also act as a support and a resistance. So one spot in particular is right here. If you see, it looks like the stock was kind of flagging, but as soon as it hit the 50-day simple moving average, it bounced way back up. So not only do they show trends, but sometimes they can even act as a support or a resistance for that stock. So I'm just going to exit out of these in the legend. So the exponential moving average I'm not going to go over because it is very similar. You can also have 3 lines. You can change the periods. Just know that it uses not a even weighting for the average. It uses a weighted average where the most recent price days are weighted more heavily. So it's a little bit more receptive to changes in momentum. But other than that, you pretty much interpret it the exact same way as the simple moving average. So the next one is the Bollinger Bands, and I'll just mouse over this for a second. So these are the 20-day simple moving average charted 2 standard deviations above and below the main price chart. So you can change these if you'd like. And they're meant to find overbought and oversold conditions of the market. So when you select it, you can see it's added. And I'm actually going to use a different ticker for this one. I'm going to use ACE for this example. So here you can see the Bollinger Bands are in light blue, and they're charted around the main price chart. So essentially, if it's towards the top of the band, it means the stock's overbought, and it could turn downwards. And if it's riding the bottom, it means the stock may be oversold, and it could turn upwards. And you kind of see that with this stock, right? It's kind of almost pinballing in between the Bollinger Bands. It's riding the top, and it goes down, and then it rides the bottom, the top. That's kind of the price correction with the oversold or overbought conditions. Also, if the price makes it outside the Bollinger Band, often there's a very short-term price correction. So you can see that happened here. It got over the top of the bar and then quickly went down. Over here, it got below the bottom bar and then quickly went up too. So if you're very careful, you could spot movements like that and try to time the entry or exit of your position. Another thing about the Bollinger Bands is that they help show you the volatility. So because they are charted 2 standard deviations above and below the price chart, they'll be wider in periods of high volatility, as volatility comes from standard deviation, and narrow during periods of low volatility. So you can see here when the stock was moving around a lot, the bands are pretty wide, but then over here it wasn't moving around too much and the bands kind of narrow. So some analysts think that a narrowing of the Bollinger Bands will signal increased volatility soon. All right, that's all I'm going to go over with the Bollinger Bands. So I'm going to exit out of those. And for the moving average convergence divergence, I'm going to use the ticker WIN. And I'm going to go over to technicals and mouse over the moving average convergence divergence. This is one of the slightly more complicated ones to explain and get the hold of. But basically it's another momentum indicator. And so it's trying to signal when the trend of the stock is changing. The default periods we use are a 12-day fast period, a slow period of 26 days, and a 9-day signal period. And I'll show you what that means when I select it. You can see that it charts below the main chart. The MACD over here in blue is the difference between the 12 and 26-day exponential moving averages, and you're looking for crossovers with the 9-day exponential moving average. And the difference between them is the divergence, so that's that green sort of histogram. So that makes it easy just to see, which is it kind of bullish or bearish more generally. And also note when you mouse over the secondary chart, the value of these lines at whatever point updates in the legend here. So the MACD does take a bit of finesse, but in general, you want to see when there are crossovers as well, because this can indicate when to buy or to sell. So I think the most obvious one is over here on the right. You can see that the MACD is above the signal line, but then it crosses below, and that's a bearish signal. You can see that the divergence goes pretty negative here, and it does come right before the stock had a downturn. So that's just, even if you're just looking at the price chart, it might looks like just a little round bump at the top. It could be just normal volatility, but the MACD was pretty definitive that this seemed like it was a change in momentum, and it looks like it was. You can also see that the MACD kind of helps to analyze this trend at the end. It's kind of sideways. It's not really clear if it'll turn up. But if you look at the MACD, it's below the signal line. So if you were following the technical analyst's advice on this, you would stay out of the stock until it looked a bit better. And just one more note: generally, crossovers tend to be So bullish crossovers are weaker below the zero line, so this zero line is also important. So for example, here, these are bullish crossovers with the MACD going above the signal line, but they're pretty far below the zero line, so they're not quite as strong, and you can see that they didn't really take off. One example over here, this was another bullish crossover below the zero line, and it did turn into a pretty strong uptrend, but if you're a bit more conservative, you might want to wait until the MACD crosses above the zero line and then enter it here just to be sure that it doesn't do something like it did over here. So that's all I'm going to go over with the moving average convergence divergence, but there is a lot of information packed into that indicator, and it does use the exponential moving average, so it's pretty receptive to changes in price. So the next one I'm going to go over is the two, relative strength index and the money flow index. And for those, I'm going to use the ticker XL. Go over the technicals menu, and I'm going to mouse over relative strength index, so that'll come up with a little blurb about it. But basically, it's just another technical momentum indicator, and it looks at the magnitude of recent gains and losses. So it's trying to find the overbought and oversold conditions of the market. We use a 14-day period, which is pretty standard. This is a very short-term indicator. So when you select it, it'll chart below the main chart, and I'm also just going to show the money flow index at the same time. It's similar to the relative strength index, except for it incorporates volume into its calculation. So that's helpful because it can tell if there's too much or too little volume associated with the move. So you can look at them together. The general guidelines for interpreting these, first of all, I should say that they are oscillators, which means that they fall in a bounded range. So they only go between 0 and 100. So they can't go outside that. And in general, for the relative strength index, if it's 70 or above, it means that the stock may be overbought and it could go down. And if it's at 30 or below, it means that the stock is oversold and it could go up. And the money flow index is similarly interpreted, except for its values are 80 and 20 instead of 70 and 30. But essentially, if it crosses these thresholds, it can just show a short-term correction. So I think this is particularly apparent in the first half of this chart. You can see that there was this big increase and then decrease, and if I mouse over, you can see that down in the legend that the RSI was at about 79 and the MFI was at 83. So this looks like it was quite overbought, and then indeed it did take this period down. And also over here you can see that the RSI and MFI are pretty low in the 20s, and then it also went up. So that's generally how you read them, but you don't want to look at just the numbers of the RSI and the MFI. You always want to look at them together with the main price chart. These are also useful because they can help you find a trend reversal, and you can find that by divergence. So that basically means when the indicator is not going in the same direction as the price. So you see how the indicators and the price are kind of mimic each other. I'm going to show you an example now where they're not, and that's actually the Time Warner that was shown in the presentation here. And this is more apparent with the money flow index, but you can see that recently the Time Warner has been increasing, but the money flow index is decreasing, and that's not a good sign. It means that this is perhaps a kind of, this run upwards doesn't really have legs. I think it's particularly interesting that the money flow index shows this more dramatically. Remember, the money flow index incorporates volume, so this could be signaling that even though the price, the gains and losses look like it, could support this move, it looks like the volume might. So that's also why it's a good reason to look at both the relative strength index and the money flow index. But say if you're an investor and you were thinking of getting into Time Warner, you could look at this chart and say, well, maybe I'll hold off for a week or two just to see, because divergence is usually a teller of a trend reversal. All right, the next one we're going to look at is just volume. So for this, I'm going to add in the ticker BMA. And in the technicals menu, there's no settings for volume. You just select it, and it'll chart a histogram of the daily trading volume below the main chart. So that's just the number of shares that trade on a specific day. And if you mouse over one of the histograms, you'll see this little tooltip come up, and it shows you the date and the number of shares that were traded, so you can get an actual number. And so volume is extremely important for technical analysis. It's right up there with price. And it's also used to confirm trends and chart patterns, or to predict trend reversals, again through divergence. So one thing I wanted to point out was a trend confirmation with this stock. You can see that towards the beginning, it was kind of bumping along, and then it had this big increase in price. And you can see at the same time the volume was also increasing upwards. So they're kind of moving up together, and so that's a good sign. If you were thinking of investing, that means that this run upwards probably has some strength behind it. Whereas if it were a big increase but no increase in volume, that could be a bad sign. It might mean that the stock is about to come down. One actually stock that looks like it may be doing that now is energy. So type that in, energy, and you can see recently the stock has been has had a good run upwards, but if you look at the volume, you can see that the volume is actually falling, and that's a pretty bad sign. It generally means that the stock will kind of run out of steam and take a dive downwards. So that's one example of volume, or finding divergence with volume. All right, that's all I'm going to go over with the volume chart. And now the last technical in our list is volume by price, and this also has no settings. And first, I'm just going to show AIG because I like the way that it illustrates the bars. So overall, just volume by price is meant to find support and resistance levels for the stock. So again, those are those levels where the stock has trouble going above or below. Each bar in this graph represents a price range, and then the length of the bar indicates how much trading happened in that price range. So you can see that this longest bar means that there's the most trading happened in this range. If you mouse over, so I'm mousing over the red part here, so you can see that there's this tooltip, and that shows the amount of trading that happened when the price moved lower. And then if you mouse over the green part, it shows the amount of trading that happened when the price moved higher. And you can also see that what the actual price range is there. So with this, the longest bar I don't think necessarily is showing a support and resistance, but I just like this chart because it's very easy to see that the bulk of this chart is occurs in this range, and then you can see that that's where the bars are. So just know that that's kind of how you can think about it. But for an example where I think it shows a good resistance is WLP, well point. So here you can see that the longest bar is down here, and the idea I meant to mention before is just that there's kind of a frenzy of trading around support and resistance, and that's why there's more volume traded at that share. So here it looks like this longest bar might be acting as a support. So it kind of bounced along a couple times, particularly here it hit almost exactly the bottom of the range, and then it bounced off. And that's, again, another chart pattern, a kind of double bottom, and then bouncing off. One thing that you can do is look at several technicals together. So I can look at volume and price and say, well, this looks like it's pretty obviously a support, but what if I add in volume? Do that, you can see there's definitely a big spike in volume around when it's around here. One thing that I wanted to point out is that the bars change depending on the time period. So that's one thing that makes volume by price a little bit tricky and takes a bit of practice to get used to. But essentially, these bars are calculated over the entire time period, so they do change depending on the time period. So, for example, I'm looking at point in 1 year, and the bars look like this. But if I go to 2 years, it looks kind of different. So just know that it depends on what time period you're looking at, and so the longest bar doesn't necessarily mean it's a support or a resistance. You may want to stay within a trend. If a stock looks like it was trending a certain way and then kind of changed its pattern, maybe want to ignore the trading data from the first trend. Again, it takes practice, but it's worth playing around with. I find it one of the very interesting, more interesting technicals to work with. One more thing I wanted to show with this chart is if you go to the settings menu, you can go to candlestick here, and that'll chart the price. Instead of in dollars, it'll chart it in candlesticks. So if I select that, you can see that the line is now made up of these red and green boxes, and so the green represents an up day, and the red represents a down day, and then the box represents the open and close of the trading prices, and then the sticks on either side of the box represents the low and high of the day. So candlesticks are really useful because they can give more information about the day's trading. And if you mouse over one of the boxes, you'll come up with this little tooltip that tells you the low, high, open, and close values as well. So I like it with this particular example because when we look at that point that looked like a resistance, you can see that indeed there was a huge rally on that day. So you can see that the stock dipped below, but then it had a huge rally and actually ended up above, and that also corresponds with this big increase in price. In volume. So it looks like this is definitely we found support at this particular date for this stock. So that's all we have for the technicals in the menu. Now I'm going to just show you how you can use technicals as part of your kind of how you can incorporate it with your research. One thing that you can do is just scroll through technicals really easily, and what I mean by that is you can take a list of stocks and just check all of their technicals one after the other. So I'm going to go to price. I'm going to maybe take out volume by price, but then add in the simple moving average. So now I have this set up, and now I can go to a set of stocks, say I can go to my watch list and go to top stocks. Then I'm going to link the table and the chart by clicking the left of these two linking icons. And now that means that whatever's selected in the table is automatically charted. And so say these are a bunch of stocks that I was thinking of buying, I can just scroll through their technicals either once a day or several times a day to see if it looks like it's a good point to enter. So I can just use I'm just using the down arrow on my keyboard, and it's updating and changing the technicals for whatever is selected. So this makes it really easy, and once you get faster at recognizing patterns, you can just see, yes, I want to enter in, or no. You can also do this with your portfolio just to quickly check the trends of the stocks that are there. So using the scroll feature and the linking with the table and the chart makes it really easy to do that. You can also load shortcuts for technicals if you're a premium member. So if there's a specific setup for technicals that you always like to see, you can save time by saving it as a shortcut. So I've saved this one called technicals. And when I select that, it automatically selects the time period, turns it into candlesticks, adds volume, and the RSI and the MFI. So that's just another way that you can save time. And if you find your favorite technicals, you can just save them and quickly get to them all at once. You can also screen on technicals in Stock Rover. We do have some screeners that kind of have technical elements. In particular, this momentum screener, which is in the library, has just looks for stocks that have price momentum. So it's near the top of its price range, its Bollinger Bands, it's in relation to its origins, its high, and also its simple moving averages. So you can do that, or you can create your own technical. Just right-click my screeners and select Create. And I'm just going to create a very simple technical screener, calling it Technicals. In step 2, I'm going to go down to the Technical Indicators folder, which is the second to last one. And there you can see some of our technical indicators. Again, there's that Bollinger Bands, the exponential moving averages, the money flow index. So say I wanted to find stocks that are maybe oversold and might turn around. I could just search for stocks that have the money flow index below 25 or so. And then I can also add in the relative strength and see if I can find any stocks with the relative strength below 35. When I type those in, they're automatically added in the third step. And then you can see, looks like around 300 stocks are passing. So I'll just keep it at those two for now, but you can change this however you'd like, and also do a blend of fundamental and technical indicators if you'd like. When I click Create, that'll load in the table, and then here's a list of all stocks that have values of the MFI and the RSI below 25 and 35, so they could potentially be candidates for a turnaround. 270 is quite a lot of stocks to look through, so you can also use a technical screener on a population of stocks that you know you're already interested in. So, for example, I can load the S&P 500 in the table just by clicking that. And then over in the navigation panel, I can right-click the technicals, not load it, just right-click it to get its menu. And then I select Screen Current Table. And that'll just apply those technicals onto this population of stocks. And when I do that, I can see that there are 4 candidates in the S&P 500 that have really low RSI and MFI, and therefore might turn around. You can see Win is one of them. And so then if you wanted to keep track of these, you could just add it to a technical watch list. So for PVH, for example, let's see. So this one, it looks like it's a fairly cyclic stock, and it's kind of just, looks like it might just be turning around. It's kind of near the bottom is where it turned around before. So I want to just watch to see what it's going to do before I actually buy it. I just kind of want to get familiar with the stock. I can right-click it and add it to watch list, and I'm going to add it to my technical watch list that I'm keeping. And then I can also, if you're a premium user, you can add a note. So I'm just going to add a research note and say, very cyclic, low RSI and MFI may turn around soon. And if I click Save, and then I go over to my notes in the right, you can see that my note appears there, and it also has the date, so I can know when it was that I made that observation. And so now if I just go to my technical watch list, which, let me get rid of these filters in the top here. So this just has 2 stocks for now, but I can keep however many I want. So now I can just kind of keep track of the stock and get familiar with it. So that's a really good way to kind of get used to technicals, but without the fear of actually having to buy one and see if you were right. You can just just get used to the process by picking out some and getting used to them. You can also kind of create a fantasy portfolio. One way that you could do that is take an existing portfolio, say this growth one, and right-click it and select Copy. And I want to copy the entire history. And I'm going to call it Growth Fantasy Technicals, just so I know that it's not my actual portfolio. But now I could either go back into the past and kind of look at when I made my purchases or sales of certain stocks, and then see what did the technicals of those stocks look at the time. Could I have actually saved some money if I had waited or gotten rid of them sooner? Or just going forward, I can kind of use this as just to test out the methods to see if it makes a big difference. So Stock Rover is a really good tool for just exploring technicals if you're unfamiliar with it, and I really encourage you to try everything you have to offer in that regard. And that's it for my demo. Now we're going to switch it over to Howard, and he's going to go through some of the questions that have come through. So if you have any questions on anything that I've gone over, please type in. All right.
Great, that was great. That was really good, Eric. I think I learned a few things myself.
All right.
So yeah, I guess on the questions, we actually had a big crowd, but there's only a couple of questions, so I'm not sure whether it was so clear that nobody has questions or technicals is such a kind of a different topic that people are kind of just absorbing it all. But in any case, maybe we can just read the couple questions and then see if any others come in.
Sure. So there was one comment about the slide numbers not showing. I'm sorry about that. For the next webinar, I'll try to change that so it's more visible. The second question we have is all of this available with a basic membership unless you identify premium members can access this or that?
Yeah, I think everything you did was basic. The only things that were premium were the two things you identified, which was the shortcuts in the chart and the notes capability. I think everything else is basic. Is that correct?
Yep, that's right. Yeah. Yeah, and again, I was mainly operating in this technicals menu in the chart there. We have a question that came in. Can you talk about the events indicator?
Do you want to do that, or do you want me to do that?
Sure. So the events, I'm just clear up the chart. So it's so events, which is right next to technicals, isn't really for technical analysis, but it is just good to know about. There's a couple things you can add on top of the chart. So this first one is earnings. So if you select that, these little boxes will show up every time the firm paid earnings. So that's pretty useful if you just want to. If you see there was a big rally, maybe it looks like, oh, that's when the earnings came out and they were good, and that's why. If you mouse over, it'll show the amount that was reported for that quarter and then how much it improved from the previous year. Also in the events menu are splits. I don't know if this stock has a split. Oh, it did. You see it opens up with this little diamond over here. So on August 16th, 2013, there was an 11 for 10 split. So that can actually be really useful for just seeing if there's a change in the chart pattern. Some stocks aren't very volatile, and then they'll have a split and they'll become very volatile. So they're worth adding in just to see if it kind of can explain how wide a chart has changed. The other ones we have are dividends. So if the stock pays dividends, actually let me get rid of that earnings, kind of cluttering it up. If the stock pays dividends, it'll show up with a circle and just say the amount that was paid out in dividends. And then the max drawdown, that's a good one to know. So this will have this downward arrow that shows the kind of the biggest peak to trough decline in the charted period. And if you mouse over, it says what that is. So this had a pretty huge max drawdown at 31.55%. And it's kind of just meant to give you a sense of risk, like what's the most that you could lose in kind of a single swoop. And so that's what the max drawdown is for. And then the last one, portfolio activity. If you have a portfolio charted, it'll just show when you had trades in that portfolio. All right, so I have another question. Can you show one more time how to do the preset technical screen linking to the indices screens? Oh, okay. So I think what they mean is if you want to screen on the on a population of stocks, you can just select an index. So I selected the S&P 500. And then you go to your screen in the navigation, and you don't click it. You just right-click it, or click that little down arrow, and select Screen Current Table. And I'll just pause on that for a second. So you get to the menu by right-clicking it, select Screen Current Table, and then that will apply the screener filter to the table. All right, the next question. For the fundamental investor, do you recommend using technicals as a way to determine when to buy, or should we consider starting with a population of technically promising stocks and then drill into fundamentals? And I'll let you take that one, Howard.
That's a great question. Well, I think that the answer to that is you start out with the fact that you're a fundamental investor. So I think fundamental investors should always start with the fundamentals. They should be picking companies that they like based on fundamental reasons such as valuation or positive outlook in the future. And then once they've got that population of stocks that they like fundamentally, at that point I think you use technicals to determine how the market is perceiving the stock at the current point in time as to whether it might be a good time to enter. Maybe the stock is oversold and it actually feels quite cheap, maybe it's had a big run-up and it feels a bit extended and it feels like it's going to come back to trend line, then you might want to exhibit some patience for the purchase. So for the fundamental investor, I think you would want to be aware of technicals and use them as a way of helping you time or control your buys and sells.
All right, great. Next question.
So that's it.
Maybe you said this, but the value 20 in the standard deviation is probably the number of days used to calculate the standard deviation. I'm not sure if I quite understand that. Maybe you can elaborate.
Well, the only place I think standard deviation occurs is in the Bollinger Bands, right? Basically.
Mm-hmm.
And I think that's 2 standard deviations in over a period of 20 days, I believe, is the way the curves are drawn. And you can control the size of the width of the bands are controlled by the deviation size. For example, if you draw that with 2, let's do that. You'll see a certain size, and I think if you change that to say 3, the band should get bigger.
Yeah,
they do. So that's where standard deviation is used in the technicals, just controlling the width of the Bollinger Bands, and the number of days is just the period that's used for the computation of the bands. Hopefully that answers the question. If it doesn't, definitely resubmit it or send us some feedback.
All right, the next question is, if you're saving a chart layout, will you also save the events for next time you're using the charting?
Oh, that's a great question. I don't know.
I believe it does. I think it does. It saves everything. So it saves time period. It saves the price setting, fundamentals, technicals. I'm pretty sure it saves everything except for the ticker, and it'll just apply it to whatever ticker is there. So it's useful not just for technicals, just for if you use charts at all and always go back to the same charts. It's a useful feature. All right. The next question, with volume by price, are there recommended periods to use to best identify supports and resistance, or does it depend on multiple factors?
Ooh, another good question. I think volume by price, I tend to start with 1 year, but I think in general you want to look at the chart of a company, just the pure price chart, and that will kind of give you some indication of kind of what's going on. But I think typical periods you'd want to use for that would be 1 year, maybe 6 months, and maybe 3 months. And then if a stock has kind of a long-term trend, you probably want to look at 2 years. So I think it's so fast to switch between the various periods. It's just one click of the mouse. I would recommend maybe experimenting with those 4 periods and then seeing if there's anything interesting in one of the periods that's really giving you some information that really shows a strong support or resistance. And then that one is would be the best one to base your technical decisions on.
Yeah, and I think it also depends on if it looks like it's in the same kind of general pattern. Sometimes stocks kind of have a break and the beginning part looks different and then it changes, and so you probably would want to only look at the ones that's in the current sort of trend or pattern. You'd want to only look at that data. All right, the next question. When you use a technical screener, can you specify weekly data or daily data for things like RSI and Bollinger band ranges?
Yeah, that's another good question, and the answer is that everything is predicated on daily data. There's no option for weekly data. Obviously, daily data gives you the best kind of resolution or granularity of the price movements, and that's what we've done. We could, in the future, supply weekly data as well because it's pretty easy to compute. But as of now, everything that Stock Rover produces, metric-wise, is daily.
All right. So one user answers as far as do you kind of start with technicals or fundamentals? They say that fundamentals are like loading the gun and technicals are the trigger. Very nicely put.
You're not pointing it at yourself.
All right. So the next question, which is at this point the last question, so if you have any others, get them in now. In several webinars, there has been an emphasis on picking stocks from sectors that are doing better than the market. Won't this approach to will this be kind of a losing strategy when reversion to mean recurs?
If you look at the long term, certainly it could be. When you have sector trends, they tend to persist for a while. So one of the things you want to look at in a sector trend is how long the trend has been going on. Certainly, if the trend has been going on for a long, long time, you're going to start to feel that maybe the trend is getting tired, and you can use technicals on a sector to determine whether the trend seems like it might have some legs or getting tired. I think that also if you do that, the idea is that you want to get into a stock when the current is kind of flowing in your favor. Now, if you do that and if you're a long-term investor, yes, certainly you might even be thinking in terms of getting out of sector, getting in out of favor sectors. But for example, in the last couple of years, like materials has been a sector that's been out of favor was out of favor for years before it kind of made any recovery. So you can burn a lot of capital before things turn around. So I think that if you do get into a sector that's quite warm and you buy stocks, you want to be monitoring both the stock and the sector. And if you feel via the technicals that volume is maybe the trend is drying up. I mean, Erica did a great chart showing, I think it was TWX, where the stock was still going up, but the volume was drying up and the MFI was going down. That's an indication of maybe a trend being exhausted, and I think at that point you might want to consider reducing or eliminating your exposure to that kind of security. So I think it comes down to time horizons, but there's no right answer. I think it comes down to judgment for the investor, basically.
Yeah, and generally, if you're kind of trading on technicals, you are monitoring it a lot. It's a much shorter term kind of strategy and than true fundamental investing is. So it's not like you just buy and hold. All right, there's one last question. How do you get the right-hand panel, the insight panel, to show up? And I'll just show. That's this double arrow icon here in the top right. I'm just hovering over it right now. So you can click it to make it go away, and that's just to give you more space in both the table and the chart, or you can just click it to come back. And also, premium users can pop it out onto a second screen, but you can minimize it, and you can also widen it too if you want to see more. Not everyone knows that. You can widen it or just get rid of it or bring it back. So it's that double arrow icon down there. And I think that's our last question right now. So thank you so much for listening. I hope you found this webinar helpful. I will be... Oh, wait, one more. Oh, you don't have the screener revert to mean. Is that over in my... let's see.
That's probably, oh yeah, I see it. It's a quant basically in my
Oh,
screeners.
the quant. Yeah, that is probably in the library. So if you click the library in the top corner up here, and this is where you can download any free screener of ours that you'd like, and you can search. So revert to mean, it's italicized because I already have that in my library, but basically you would just go to the library, search for it, select import, and then I already have this in my account, so it's going to prompt me that I already have it. So I'm going to rename it and then click continue. And you can see that it's just added it again. So any of the screeners that you see over here, it's possible that they're from the library up here in the top left. Okay, I think that is the last question. So I'm going to sign off, but I will be emailing you with a link to the recording when we have this up on the website, which will hopefully be by the end of the week. So you can rewatch it, you can stop it, jump to a certain part, and you also have the handouts from it as well if you want to study this. So thank you so much. I hope you found it helpful, and good luck with your technical analysis.